If your investing skills are not at the level of Warren Buffett, Peter Lynch, Charlie Munger, or Ben Graham, you're not going to beat the market consistently in the long run. If you're not at that level, then investing in index fund is definitely for you. I know it's hard for us to admit that our skills are not of top notch when it comes to driving or investing. We constantly overestimate our abilities. It may be okay in other aspects of your life, but when it comes to investing, that is going to cost you pretty big dollars. Index fund investing is the only game or competition in this planet that allows you to beat over 90% of your competitors, even when you dedicate very little time or energy or don't have a whole lot of knowledge or experience in this field. Best of all, you don't need a lot of money to start investing in index funds. Hello and welcome back. In this video, I'm going to explain why investing in index funds and not in the individual stock is the way to go. Investing in index fund guarantees you that you get your fair share of the entire economy's performance. Investing in individual stock is simply too risky for over 95% of the investors. If you're one of the top 5% investors, congratulations. You can stop watching this video and go enjoy your day. I won't be offended. This video explains the why of index funds. If you need to know the process of investing in index funds, I've created another video called It's Impossible Not to Be Wealthy. I'll put a link somewhere here. If not, then you can just go out on the list and watch that video. In that video, I walk you through the process of finding the best index funds, researching them, and then buying them. If you have retirement accounts like 401k or IRA and you want to use the same techniques in those accounts, you can go watch the other video that I have. It's called Become Incredibly Wealthy Through Your Retirement Accounts. I'll try to put the link somewhere here. So without further ado, let's dive into why you should invest in index funds. Number one, it's very easy. It's straightforward and very easy to understand for most investors. Index funds are very easily accessible and are available in all investment brokerage platforms. You can go out and buy them just like you buy things off of Amazon. Actually, I find it easier to buy index funds than buying things off of Amazon because I don't need to read reviews or details or compare prices. Because when I buy index funds, I know exactly what I'm buying for what amount, and what I'm getting for my dollars. And if you don't want to spend even that little time, a lot of brokerage platforms now let you automate that process so you can buy a certain amount of index funds on a regular basis out of your account. A lot of index funds have very low or almost no minimum investment requirements. That means you can invest in whatever dollars you have and however frequently you want to invest in. Number two, it's a passive investment strategy. Passive investment strategy means it's perfect for those who don't have time or interest to read hundreds of annual reports of the companies, or those who don't want to analyze the financial statements of those companies. If you invest in index funds, you don't need to constantly worry about the performance of those companies. You don't need to dial into their earnings calls or track their performance. And you certainly don't need to trade in or out of the market all the time. So investing in index fund is ideal for those who are not top-notch investors like Warren Buffett and Peter Lynch. If you're not one of those investors, then index fund indexing is definitely for you. This passive investing strategy allows you to invest your time in other activities in your life. Number three, instant superior diversification. Index funds invest in broad range of stock or bonds. If you invest in total stock market index fund, that you investing in almost 4,000 companies. If you're investing in the total bond market index fund, then you're buying thousands of quality grade bonds at the same time. That instant superior diversification means your investments is spread across multiple asset classes and companies and sectors. That means you can reduce the risk of individual stocks and bonds, and your portfolio stays stable even through rough times. Number four, lowest cost option. Index fund investing is one of the lowest cost options when it comes to investing because they have one of the lowest expense ratio. The expense ratio is the percentage of your portfolio that you pay on an annual basis just to own those funds. Usually the index funds have the lowest or sometimes no expense ratio. That means you're not paying too much or you're not paying at all to own those funds because they replicate the market, right? That means they don't need to spend a lot of money on ineffective, expensive research and and hire costly fund managers, because those actively managed funds cost you somewhere between 1.5 and 2% of your portfolio on an annual basis. And those costs compound over time. How do you think so many fund managers have those private jets and yachts and Armani suits? What do you think funds those lavish lifestyle? That is definitely coming out of the returns that should be in your pocket. If you don't believe me, go out, find one compound calculator, start with your portfolio amount, and whatever you're adding on an annual or monthly basis, use 1.5 to 2% as your rate of return, and see how much interest that calculates over time, like 20 years, for example, right? And you would see how much money they would take away from your investment returns. Number 5, consistent performance. In the long run, the index fund closely mirrors the performance of the market index that they replicate. And as long as you do not disrupt or do not fiddle with your investment, you're guaranteed to get those market returns. And you don't want to mess with your investments too frequently, especially if you're investing in taxable accounts, because the capital gain taxes will eat into your return in the long run. You can compare investing in index fund with planting seeds or plant in your garden, because you go to your garden in the morning, you plant some seeds and plants, and you won't go out in the afternoon and dig them out. Similarly, you don't want to disrupt the growth and the compounding of your wealth when that you have invested through index funds. I know index fund performance does not outperform the market, but it certainly does not underperform the market either in the long run. Only very tiny fraction of fund managers can beat the market consistently in the long run. If you have the vision or the ability to spot that fund manager that's going to consistently beat the market, you might as well use that vision or knowledge to spot that stock that's going to go 1,000-folds. In that case, why do you need to go through the fund manager? You can do that on your own. Number 6, low risk. Instant and superior diversification allows you to reduce your investment risk because your assets are invested across multiple asset classes. That provides a superior cushion to your portfolio even when the market crashes or individual companies fail. The best thing about index fund investing is self-cleansing, right? They're out of thousands of companies that are included in the index funds. The lowest of the lowest performers automatically get dropped off. You don't need to do anything to drop them off, right? And also the new superstars get included in those index funds. So you get the double advantage of not having to worry about the lowest of the lowest performers, and also don't need to worry about missing out on those new superstars. Number 7, time saving. Investing in index funds requires almost no time, right? You just need a few minutes a month. And if you don't want to spend even that, you can automate that process. Almost all brokerage platforms now allow you to automate the process of buying those funds on a regular basis with the specific dollar amounts that you have. The investing in index fund is a set and forget strategy that allows you to save so much time that you can invest in yourself, your family, or other important pursuits that you have in your life. Number 8, no managerial biases or BS. The performance of actively managed funds highly depends on the decisions that the fund managers make. Like everybody else, they overestimate their own abilities, and they do that very frequently. And at the end, you end up paying for their stupid mistakes. And they constantly trade in and out of the stock market, and that causes inconsistent performance and high cost. And those high costs are transferred to you through high investment fees. Actively managed fund managers often manipulate their performance to attract new customers. So if you invest in index fund, you don't need to worry about any of that BS. And investing in index fund also allows you to avoid those subjective decisions and those human errors and those stupid decisions that those fund managers make. Number 9, transparency. Index funds disclose their holdings on a regular basis. Even though they invest in thousands of stocks, they disclose which stocks they have invested in. So you see exactly which companies you own and how your funds are allocated among those companies. This kind of transparency allows you to have that high degree of trust and confidence, and that allows you to sleep soundly through the night, even during the rough times. In index fund investing, you don't need to worry about somebody cheating you out of your returns, because the index funds track the market and you get your fair share of the return. Number 10, it is the long-term wealth building tool. Regardless of which phase of life you're in, index fund investing is still for you. If you're just starting out and if you're in the wealth accumulation phase, or if you're approaching retirement and you're in the wealth preservation phase, index fund investing still works very well for you because it allows you to consistently contribute to your investments, and your investments grow and compound at a consistent rate. Indexing in index fund might seem like you're you're putting all of your eggs in one basket, but actually you're diversifying your investment across multiple asset classes and companies. So the index fund investing is the safest basket for your nest eggs. Here, don't worry about putting all of your eggs in one basket. Just watch that one safest basket and you'll be in pretty good space. And finally, here is the thought that makes me almost giddy about index fund investing. Remember, there are thousands of CEOs and millions of their employees across the globe working very, very hard to make profit for their companies. That means they're working very hard to make profit for you. Think about Tim Cook at Apple, Jensen Huang at Nvidia, Sundar Pichai at Google, or Elon Musk at Tesla. All of their brilliance, all of their hard work is contributing to your wealth building. I find this funny that Elon Musk says he works for 18 hours and sleeps 6 hours. Right? So that means he's contributing to my wealth building. Thank you, Elon. I hope you found this video helpful. Please like and share this, and don't forget to subscribe to my channel. Thank you and see you soon.